Well, in the marketplace right now, the financing, there's money available, but the money it's a little tougher to get for credits to get it if they're a little tougher credit. Most of the people that have got good credit, no problem, and the money is pretty cheap right now. The tougher credits, it's a little harder or a little longer to get financing, but it can be done if you go about it in the right ways. For the tougher credits, sometimes some of the things they can do to help out in this tighter credit market is, number one, make sure they know where they're at. If they've got some bad reports out there, make sure they get those credit reports cleared up. Also, one of the things that a tougher credit does a lot of times is rents a piece of equipment for a short period of time, or sets up a lease, which is easier to get financing on. And then once they've shown that they have a good pay history and they also have the work to keep that piece of equipment busy, then that helps their credit in the future and down the road. One of the things also, when they're preparing to go before the lender, make sure they know what kind of work they have lined up for the next several months, because that'll help a lender be more comfortable with that credit. Yeah, on a long-term basis, the contractors, in order for them to continue to have a good credit rating, is to make sure their cash flows going forward match up with what they're having to pay out on their equipment costs, the operations cost. One of the things long term that they should look at is what kind of jobs do they have lined up, what kind of income is coming in, and is it irregular or is it a monthly regular income, and then match up their availability of cash and credit to match that for the future. That way, and you plan for emergencies. That way they don't get into one of those cash crunch times, and that's usually what's going to destroy a company's credit rating. And generally, the customer will find out that when a manufacturer offers incentives, they're usually a better incentive than the borrowing costs at their local bank, because the manufacturer has a reason to offer those incentives. They want to move that particular product, or this is the time of year when that product is popular, so they want to get their market share. And usually those programs, either with discounts sometimes or else financing, are very attractive. It can be as low as 0% for a certain amount of time. But a deferred payment program, in case that customer is not going to be using the piece of equipment right away, he can wait 120 days before he has to make that first payment, so he can get it into the field and be working with it, collecting rents and revenue on it already.